Good afternoon, Fahmy MZ here. It's 4:38 p.m. on Wednesday, 27th of September. Just a very, very, very general comment, guys. There's a lot of updates coming through. Whatever operating system you're using, something is happening. There may be a backdoor somewhere that's open in something in one of these servers or browsers, what have you. I've never seen so much updates. So take care of your assets, your digital assets. Make sure you're backed up. Make sure you have latest copies in. And don't go to links you don't know. Do not open links you don't trust and you don't know. When I get a link I don't know, I always write back to the person saying, did you send me this? Is this you? Have you opened it yourself? And if I don't get a straight answer, I don't even answer. I let it go. Delete button. Okay. All right. All right. As you know, we Friday is end of a quarter, so there's a lot of activity. Today was another example of quite a bit of intraday activity. Let me go to overnight. You can see what I'm talking about. There we go. This is a 30 minutes, okay, of the future. So you could see the wild ride we're having, pretty much netting next to zero or very small. Here's the NQs versus. Remember, there's a cost of carry there versus the cash. That's $1. It's nothing. And here, about a quarter of 1%, or 34 bucks on NDX move. So suffice to say that I'm itching to get long. We're going to get to why. But this market doesn't let you. I mean, the activity like yesterday. Today was good, but look at yesterday, obviously. Now, we did get out of position a little bit early with the actual option we had, mainly because I got burned here. I think that's the 14, right? Yeah, and at 50, I jumped out. I missed the following week. Our trade we had was due on 29th. Those were 29th September options. So we're gonna. It's not going to show in the current issue because that's our last comment there. So we got to go back to archive to grab the trade. Let's go back 1 week to 15th. You could see the trade, and this is our exit. We exited about I don't know, 3 to 5 days early. So this number, I'm sorry, this number went to 10 almost. Went to theoretical max. It doesn't make sense, but it did. Why? There's a put activity now because we trade at 4:30 today. You trade down here on the spies. Let's go back here. Let's make sure we're clear. There we go. Or fairly, actually below 4:30. Yeah, we trade 4:20s today. Yeah. Here's the rate. We went to 4:22. I totally missed the severity of this push down. Now, part of that is not in the charts. It's politics. We got a bunch of idiots we have hired on every end of Pennsylvania Avenue that you like, and they can't figure out what to do, and they're after BS. In the meantime, we're doing this. We're doing this now. You see the move on the TYA, 10-year, 10 and 5. It's just the short end is sitting. It's a long end that's getting nuts now. I think we're gonna have some asset repricing forward. I'm dying to get long, but this doesn't tell me it's a good time. Okay. I mean, if you go back here, you can see these big moves. Like, look at yesterday move was massive. Now, today was the maybe internal reversal. I'm not convinced yet. Why? Because we're still at the verge of shutdown. A few assets will be protected, but majority would be in trouble. Like, you can have military be on alert, but not get paid. I mean, what are we talking about here? These guys are a bunch of idiots. Don't they know how the Roman Empire fell? The Roman Empire was only slightly better. They said, well, we'll pay you, but we devaluated silver or bronze coins. So this doesn't look good. In the meantime, the debt is over $1 trillion. So if you do the math, it comes to about $5 billion an hour. Yes, 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 $5 billion an hour. If my math is correct, I'm talking about working, not 24/7, but I'm talking about working hours. Yeah, 8 hours a day, 40 hours a week. Yeah, it's ridiculous. It's absolutely ridiculous. I don't know if you were with me. I don't know if you heard me back in the, I think it was 13 or 14, 2014, 2013, maybe sooner, probably 12, 13, that area. I did a webinar out of Chicago that talked about if you do a crossover, you do two curves. One, what's happening with the demographics and what's happening with the debt. Somewhere around 14 to 15 to 16, we should get into trouble. Like a year forward, 2 years forward. You see what I'm talking about? So, yeah. So with that said, precarious market, you gotta be very careful. The only thing I know do well is day trade because I can change my position. I can, if if I'm comfortable, and also at night I sleep because I have no positions overnight. So we'll see. Let's see how I get my courage up to decipher all this garbage and all this noise and figure out a trade that will give us a chance a couple of weeks forward. I'd like to get as close to Friday to get a position or Monday, because I think smarter people will prevail and we will not have a shutdown. But I can't say that's 100%. I can't. Nobody can. So remember last time we were shut down in 2018. I forgot how long we were shut down. We were shut down for a while. So, and then there's the whole camp out there who want us to be shut down. So I think they should be just court-martialed. Where I come from, you get court-martialed. Yeah. With or without attorney. Yeah, exactly. Anyhow, so let's go through econ data first. But I want to make sure I address where we were before, and then we'll go through our charts. Okay. All right. Today we had NBA. I posted this NBA data. I mean, a little bit noise level. Okay, it's week to week, week over week. But obviously the rates are just popping, and this should be slowing down even further. I'm actually surprised it was only 0.1% lower. So the balloon, the air is coming out of the balloon. Some of my real estate friends were saying, "Oh, let's syndicate this, let's do this." And there are a bunch of plans you have. Now they're just having a drink. Yeah, different ballgame. Yeah. Durable goods that also came in today, and came strong again. To take a look. Look at what the numbers were. This is prior and then revised. Forget that. Look at consensus and the range. Look where we came in. So on the month-to-month extra expression was double. And look at the capital goods. So the economy internally is strong, still is humming forward. And next Friday we'll have not this Friday, not 2 days from now, but a week from this Friday, we'll have the non-farm. So we'll have to take a look at that. EIA, I don't care. State Street, I don't care. GDP tomorrow. Yeah. Now, here's the problem with this GDP. This is always read the fine print, the details. It's a final for Q2. That's not what I want to deal with. I want to know what we're doing in Q3. There was a talk yesterday, I think it was on Bloomberg, that said that the Q3 estimate was 4. Now that's bad news for the bonds. Again, the economy is very strong. Moreover, we're seeing real. We're seeing income growth in real terms, even with the inflation at 3%. We haven't had that in years. However you want to cut it, those are the data. Okay, and it's good and bad. It's good for the incumbent, very bad for bonds, which is for all of us. So Fed is going to continue to be very, very vigilant. I think we had, as we discussed last time, we should be flat. They were flat, but they're not going to stay flat for long. If these numbers like this, we're going to be back to a quarter point or maybe a half a point. I don't see us easing at least a year from now. At least. Okay. These numbers have to get really bad for them to ease. We're nowhere close. They may keep it flat for a while, no touch it. But it's a binary, either up or flat. There's no decreasing. So the real estate folks are in trouble. Yes, of course. That's why you see a lot of them on the Facebook out skiing, doing this, doing that, getting the kids out of town and so forth. Yeah, I mean, what are you gonna do? Sit home and look at the data and get depressed? Yeah. Or you want to drive Uber? Neither of them are good. So might as well go on vacation. I'm not good at trade data. I'll tell you up front. So we're gonna see it. Take a look. 91s. What's the benchmark? You can take a look. 90s. These are in billions. Okay. And remember, they're negative. So this also says possibly the upper part of the range is good. Good is positive. So here's a part of a problem here. Dollar. With this rate increases, dollar is very expensive right now. If you look at these, dollar is flying. Good example. Look at Japan, JYP. Okay, I'm sorry, JPY. Japanese yen has never been like this before. Hey, Siamak, how are you? Hi, Thomas, how are you, sir? Hasn't been like this before against the dollar in a while. So most likely, Japanese economy is going to be in trouble for a while. We're importing easily. We have a big buying power, but we have an export issue because of the dollar so expensive. Yeah, so they got to use more their current currency to convert to dollar and buy our goods. That's not good. Okay, so let's go back to the calendar here. This one I want to look at definitely, and then of course consumer sentiment. That's number. This is green now, but personal income. Yeah, there we go. This is what you want to probably print out and have it in front of you Friday morning. It comes at 8:30. Okay, and obviously there's going to be an added column here. The prior will be revisited and revised. Yeah, not revisited, but obviously they're revisiting it now. It'll be revised by Friday morning report, and that's the numbers we're looking at. So to me, this is going to be very important. This number, year to year PC price index. Now I'm an economist. For that I listen to Anita in our chat room. She's got the education. She's got obviously some trading. So I learned from her. I listen. I go and research. But that's the number I want to look at. See how that ends. A PC price index. Okay. That's it. Now you got to have also think about Jerome Powell speaks tomorrow at 4, and you got John Williams who runs the New York Fed on Friday at noon, a little bit afternoon. Tomorrow morning, you got Gillespie who runs Chicago, U of Chicago. Again, another Dove. You know, he was a Obama advisor, or maybe head of a Council of Economic Advisor. I forget. CEA at the White House. Okay, so that's our current setup. Again, I still don't have anything for forward week, but I've ordered the calendar by Econoday for 2024, which comes in a book. So you have the whole, you have a whole year in front of you if you want to. But at least gives me the week from here and then the following week, so I can take share with you what I see coming. To me, timing charts are important, calendar is important, and also order flow. That's how I do my trades in the day. That's how I sit up in the morning. You know, what's the charts are telling me as of the close, what's econ data it is, and then once you get into actual what to trade, I want to make sure I understand the order flow. So, kind of top down. I traded today about, let's see. I take notes. I have to keep my sanity, I was out at 1022. I was up 2.43, and that was a very nice day. So, and I range usually between 2 to 5 or 3 to about 8, that range. On the downside, 2 to 3% downside, upside 5 to 8%, and I stop. I got to that level by 10:22, and guess what? That was it for me. Why? Just the overall uh, uh, bias on Wednesday, which is very indeterminate. That's a coin toss. And also looking at the calendar and all the politics at the end of the year and so on and so forth, I just to myself, doesn't make sense. Now, in addition to that, we have this, I'm no expert, what's his name? Peter Cook is, but we also had here the JPM collar trade, and that's huge, and that's also selling Friday. So this week is very tough one. You gotta really rely on indicators. It's kind of those days that you close the shades, take the stopwatch on the map, and you fly. Okay, you gotta look at instrumentation. You just can't leave the windows open, look outside, and make a decision. It's not gonna work. They're probably gonna fool you. So look what they did today. Look what they did today. It's just amazing from the open on how many ups and downs we had. Now, my advice always is find your spot, take advantage of it, book it, and take the money out. Don't sit there thinking about it. Don't or say, hey, maybe I have another chance. Nobody knows if you do. Hey, Randy, how are you? Nobody knows you're gonna have another chance or not. But for now, you gotta take advantage of it. Okay. Okay. What else? What else I want to go over with that? Okay. Let's go to charts. Okay. Again, this is a big chart to me. I'm referencing it this and the vols constantly. You can see what's happening here too. So 200 bar is looming. This is it's cap weighted, obviously. It's a standard S&P, not the equal weighted. We've already gone through 200. Okay, so that's 41.96. A couple of people that I trust. I mean, they're probably better. They're a lot expensive in the market, I should say. They're probably better at programming systems and logic than going there and doing market timing. But often they have a good sense, good feel. They're telling me we should see 4,000. Okay. Nice round number. We should go there. I would modify that and say, let's see what we're doing at 200 day, which is a key area for me. Always has been, always will be on SPX. So that's a 4,100. And look at the confluence we have. It's negative 3 sigma. I think with all that's going on, that's why today it didn't rally up. They just kept it even. Is that we're probably going to be there by Friday night. I don't see the government in it that we have as it exists now in Washington will come up in any deal. They're so mutually exclusive in their wants and needs, way too far apart. Hi, Irvin, how are you? Welcome, sir. So I'm looking somewhere at 4,100. I'm itching to get long. I sent a note. I put a note on Twitter saying that, and I trade very little in the morning, but I spent probably most of my afternoon watching it short-term wise, 5, 10 minute, 30-minute bars, and then reevaluating all these readings. One of them obviously is Sigma channel. I'm sorry, uh, um, McClellan oscillator. Very good, very strong, bullish divergence. Bullish divergence. Look what the value was here, or about here. We're a lot lower, but higher here. So that's a nice one. Now that's a lot of this is advanced decline, as you know. Plus there's some smoothing functions that takes advanced decline. So it should be low in lag, not drag, lag in terms of timing. But it's just setting up for a long now. When I go long and short with Timer Digest, it's a little bit different than when we do, let's say, NQ futures. Timer Digest, I'm going to hold it to 2 to 3 weeks, maybe 4. I look at a wider band. I look at a Kono probability, and then I'll go into SPY, trying to find. There we go. Trying to find where does it make sense to me, and what are these levels are. Obviously, we've been pushing it out again. I got out a little bit too early here. So I got out here. I got out here. And a little choppiness, but look, I missed this part. Now, this could have caused people to panic. Also, we had a theta decay. Okay. But then when you get a X minus S move in the actual model, it takes over the theta decay. Forget the theta decay. We're going to deliver you some alpha. And they did. And look where it is now. So I'll look for some levels to look at. Before we were short, let's see, we were short 5. We were short via puts from 450 to 440. Okay. A little bit after 440, it just was a hot knife through butter. Completely went nuts and took quite a bit out. So this was like 286 or so on the spread. It went to over 10. Mathematically, is not to say possible, but we did. I think there's a lot of panic. So in some areas, and you can tell. My if you use what's called um, um, ticket strike, in the background is always running. It alerts me if there's something activity. It's a block trades by name. It includes stocks, ETFs, futures. I don't do currency, but bonds. Other than currencies, all assets are represented. And it goes nuts. You got to jump in and take a look. We've had a few of those days. I mean, just look at even earlier today, first hour. So if you go here, you'll see it better. And this drop, it wasn't a joke. Okay, we're beginning to hit 4 sigmas, and yet we only closed +7 because of a zero DTEs. The zero the days to expiration on the options. To me, you're really trading futures at 50 delta. What are you doing that for? Trade the futures. Get 100 delta. You're taking the risk at half the return. It just doesn't make sense. And you got to realize what the vol you are, what the vol the market makers are selling you. All you need is a little bit more discipline, a little bit more cash, and trade the future. Okay. So, but those options create a lot of skew, especially intraday, because these are zero dated. They're due that day. They come in, they get a list in the morning and they're a list the night before, whatever, and then it's good for a day. I wouldn't do that. I wouldn't do that. For half the delta, are you nuts? So, but anyhow, that's what's causing a lot of pressure. The numbers are massive. Actually, I've got to go in there and take a look. I promise one of my option guys that I would look at it. I haven't. We've been busy. We have the end of a quarter for the our happy package, our indicators, and then end of a month coming, obviously, for the 4 times a year this happens with our orb, and orb is on fire. We got the code out. There was a little mistake last night. We found out on one module of happy. There are 3 components to it: basic, pro, and expert. On the basic one, there was a problem we found. It looks like the conversion to, again, those of you who trade with me on that, please pay attention. This is 71. The conversion to 71 had a problem. Okay, it didn't look right. So we recompiled everything last night, and this afternoon we waited because it's not due until Monday, or actually Sunday morning when the first of the month is. We said it separately, emphasizing to you, please apply that in, and not just the whole happy. What we sent to you yesterday was the compiling of all the code by version 71, okay, because we were running at 70, but this one now is just that one module. Okay, so please apply. Hold on. You can see what's happening on equal weighted. I mean, it's just they can't stop it. Okay, I mean, I think you gotta also see the 200-day for the equal weighted on Nasdaq. So we'll see. We'll see. All I know is that these folks down in Washington are playing with fire. They have no clue. How many times people are supposed to lose everything? Or lose 80%? How are they going to come back? What's a 401k? Is that half a 1k? I mean, it's just egos. Too many egos. So, transportation. Possibly finding a support here. That gives me another more credence to think about Yeah, we may be getting ready. And by the way, when I say going up, I'm not going long big time. No. With the bonds where they are, all asset classes have to be repriced. I'm just talking about dead cat bounce. Yeah, I want to be clear. Dead cat bounce. Short term, going in, going out, boom. And then most probably going back to short. Now, if you have a long term shut off, then all this game is all over. This plan is no good. We should be short and should be holding it. Just like 2018. Remember 2018? I mean, those of you would be noticed that we went short like February. I'm sorry, October 1st. We held it 3 times. We covered Christmas Eve. But once a month we went short and held it. We would rally up, we would not touch. We just short. We wait for it to get into exhaustion and short again. Let's go to SQ. The signal that we got to trade the 2018 like that was from August of 2018. Let me change it. I don't know if this works or not, but let's try it. I'm trying to compress things. Okay. This is no, that's 20, right? Yeah, that's a 20. No, this is the pandemic. Wow, Jesus. Yeah, this is what I'm talking about. This one. We had a signal here. We had this signal that came in and hit us and culminated in a big drop in December. So the last signal we have is, last signal we have is about here. So let's see when that is. This is almost a replay there. That's August 4th. This is end of May, I think. No, yeah, end of May, beginning of June. Remember, these are weekly, yes. I'm just compressing it here. So if we do that, then next 3 months will be fighting with the short side to get on board strategically and being long tactically. I mean, short term. Okay, so that's where we're headed. Yeah, again, the next couple of days are a big tell from where we are. What's happening here? Where are we going to go? I'm sorry, 1 second. Something is off here. Is it the data? I think the data is a problem. Hold on. I need one more year. That's why. Okay, hold on. Sorry. Bear with me. There you go. Okay, so that's what I see. That's the nearest shutdown we've had. Now, there's a lot of explaining and this and that and on the newspaper saying what happened in 2018. I don't care. That's not the issue. This is what the issue is. Data. Not the explanations. It's really is price and volume. Because I'm looking for the votes. These are votes of people. People pull money out of their pocket and traded it. That's what you want to look at. All right. Canaries, we talked about that. Russell is in trouble near the lows of the year, as you can see. And here's the low of the year, 0.1706. So another 75 handles. Yeah. Why? Interest rates. These guys borrow a lot. Yeah. They don't have the ability to raise equity, so they have to borrow, and these rates are going to impact them. Yeah, just listen to private equity or VC folks. Yeah. Every day seems to be another come to Jesus meeting for them. 1 second. All right. So, how are we doing here? Let's do our count. -1, -2, -3, -4. Positive. So 1, 4. 1, 0, 4. 1, 0, 5. And then 2, 0, 5. Okay? So, we're getting set up for a move up. We just haven't finished the flush. It's getting there. I like to see 0, 8. Then that's a flush. May not get it. Okay, what we want as a numerical processors looking at these is pure. It's idealistic. I don't know if we'll go there or not, but look for that. Where all of these are negative, then we're very close to low. Okay. This is VIX. VIX have pulled up. Not a surprise. You saw what a zero lag indicator said. CI. It says what it's going to do. So we're pulling up now. You got to keep track of its Sigma channel. If you have any platform can do that, just use a multiple Bollinger Bands to see where you are. There's no magic to that. Yeah. Okay. Now you see probably some color here. We obviously we upgraded to our CGs series, which is color gradient, and you could see within these colors how the pressure was changing. I like what I see here. You see the lows of the CI diff, the red orange, getting better and better. So that's why I'm more courageous to get long here shortly. But obviously these push downs are heavy. I think we're still going to be negative into the week. We'll see. I have no idea. Sigma levels. I mean SP1 near almost touched -3 sigma. It's good spot. Look where we were here yesterday. I think Admiral Tico posted this. Yeah, you should be following Admiral Tico on Twitter. He posts his charts there. It was negative 8.6. Close enough. But we want to really see 10. Good divergence already. You see that? Remember, Momo is a smaller brethren of SP1, which helps us at times, not always, but times, for seeking and finding bullish divergence. This is a bullish divergence. Lower value here, higher value there. Now, if something goes wrong the next 2 or 3 days, all of this is history. We're going to be negative 11, negative 12 down here. We've had values of negative 14 on Momo. It's ideally leveled or it's equally distributed, I should say, to give you values between negative 10 and positive 10. But markets are emotional when they get excessive for no good reason. It could be even intraday. We can travel down there, and then you jump in. You gotta jump in. I mean, if it gets that low, mortgage the house, the wife, the second house, the boat, the dog, the kids, whatever you can. Borrow hard money, whatever you can. Get out there and buy the market. We could be close. We'll see. My problem is this isn't just another. The best these guys can do is a continuing resolution. In a month or two, we're going to be the same boat. Hamon kase, as we say in Persian. Same bowl and same soup. Nothing's going to change. So, yeah, I think this could be the nature of our business going forward because of the debt. How long have I been complaining about the debt? Yeah. Look, we're borrowing to pay the interest on the debt. We have another 7 trillion or 8 trillion coming due in the next 2 years. And do you know what rates those were? Okay, let me ask you another question. Do you see what rates they're going to be? Yeah. That's got to be a mess. That's got to be a mess. So we got to stop it. Also, we guys close the border. Just get rid of the asylum rules. No more asylums. Sorry, we're bankrupt. Can't come in. Go somewhere else. If you want to get asylum, stay in your own country. Go to a U.S. passport, U.S. visa. I mean, consulate or embassy, and you stay in your country until we tell you. This border crap gotta close. So, am I a fascist? No, but I'm close. So, especially now, we can't afford this. This is the problem. That's why you have all those potholes. We can't take the money and fix the stuff we need to fix here. So, it's sad. Okay, we talk about VIX. Let's go to Momo. We talk about. Okay, here's another proof. I'm sorry, I wanted to make sure we go over that. Let me refresh. There we go. Yeah. Oh, by the way, Dennis, there's a description of this thing. Hold on. There's a description of this divergence. It's called launchpad mode, and that was our original code. I mean, when we come to launchpad modes, and there were times you could see it a lot. 2013, 2014, I was in Chicago. It would show up, and that was a code. Mortgage everything: the kid, the wife, the mistress, the second home, the boat, the dog, the cat, because you need money to buy the market. and during that leverage run up, then you paid off. So, bring in the Romans. Yeah. Mortgage the Romans. Yes, mortgage the Romans. Yes, I got a few extra ones here. Yeah, and then it dies. It does not go forever. This is like a 2-week process. Okay, and then you cash out. Look, you can see already what's happening with CIDIP is going that area. Now let's go. Let's talk about this. Did you refresh this? Yeah, you did. Okay, 48. We haven't done at this value since March of this year. Actually, were we there? Oh no, hold on. We're at 47. So if you go here, it goes back into last year. So this is the all-time high for this last trailing 12 months. TTFs, 12 trailing months. It's a high. That tells me a low is near. It won't be immediately. It's not next day, but a few, maybe a week to two, where the low is going to be in there. And now, because we have theta, that's different problem. What we may do, get long with time of digest and just don't put and just take a little spy trade on cash, but not the option yet, until we get a little more confirmation. Then we put the option on, and we may get out the option sooner, just like we did last time. Why? It's a lot easier to trade SPY itself than the SPY options because of the spread. Of course. So that's what I would be looking at. We're at 135 now. As you know, the shift is 140 because of the levels have changed. The min max has changed from 100 to 150 as a design value. As you know, as this was coming out, I was called into CBOE, start looking at this as a practitioner with a courtesy intro by a head of volatility at Citadel. And those guys know. Those guys are very, very smart. Indian fellow. Now it's shifted. This is actual high and lows. Now that it's actually, it doesn't trade. It's enumerated. Okay, it has to do with the SPX option, so it doesn't trade itself. So you can't manipulate it. It's like the old VIX. It's observation value. Okay, which is very. That's what I like. It's about below 140. That's the center line. 110 to 170. Okay, this is high and low. The approximate goes to 140, so we were below that. No signal. Probably those who were thinking about these numbers down here up to 4,000 are already in. Going in now, you're not going to make money. Why? Balls are too high. You're in late. Here's where you look at the signals. When it gives you these values. High value relative to the area it was trading and near. And how do you know that? Against the Sigma channel. Because Sigma gives you a tool to measure something against itself. Very simple. Not complicated. Anybody could do. Hey, Tico does it. And I know he's a Roman. I understand that. But if Tico can do it, you can do it. So, treasuries. Now, these are monthly support and resistance. Look, we're above MR2. This is MR1. This is just going nuts. This is going to make havoc in crowding out the borrowing. I mean, you just listen. 4.7. Look at how tight it is. It's very flat, by the way. Up here, I'll buy the 7-year. I mean 5-year. I'll buy the 5-year, or even. Well, this is 91. This is too much, but you can buy a 5-year. I don't know what the 2-year is, but don't. TradeStation doesn't offer a 2-year index. I've been asking them, or maybe CBOE doesn't because that's a CBOE product. But here's a 5-year. So this is creating havoc in the bond market because of where the yields are and crowding out normal debt refinance for corporates and also speculative money for VCs, or exit plan for their positions. They can. The only thing I'm hearing that is getting any help is AI. Only AI is where I see getting some money, and I think that's going to be shut soon too. Now, there's a whole camp out there in the speculative market. Remember, I do NQ futures. You can't get more speculative than that. I heard from one of my astute traders in the Midwest, very smart guy, ex-bond market fellow. He says this AI thing is also probably 80% is fluff. He'll sort it out. Just like Turn of the century, we had 8,000 railroads. Now we have 3. So, so this is crowding out some of that. We'll see. My bigger problem after that is the debt that has to be refinanced. These rates going to be expensive. Then after that is the CMBS, commercial mortgage-backed securities. Just drive down a major street on a major city like Magnificent Mile in Chicago. Go up one of the high rises and you can see every high rise around you. These are offices. They're empty. And these are coming due in about 2 years from now. So it could be a bumpy road. I love it though. Why? It's great for my orb. It's the best time for software like orb, which is volatility. We don't make much money when we go sideways. We need some volatility to shake the market, and we jump it, and I mean the machine does automatically take advantage of. We're heading that way. When is the time? When is a good time to buy? I don't trade bonds that much, Randy. I haven't traded them in years. I was a student of Richard Roll. The book was Fabosi, which I say is probably better than melatonin. So have it near on your nightstand. Yeah, if you want to fall asleep. And the only experience I have with that is the blondes fall asleep faster with it than the brunettes. Yes, but the bonds are very complicated. I don't know. I don't know. I could advise you. I would look at what okay, there's a fixed income used to be. Okay, but I'm sure it's out there because there's such a big player. There's a fixed income commentary by Goldman. Try to see if you can get a copy of that. I can't get it anymore. My sister used to. There used to be her banker, so I would get a lot of that research. But she no longer does that. She's retired. The other one is look at what Double Line does. Double Line Capital, which is Jeffrey Gunlock. I'm not good at bonds, but all I know is this: we have a crowding out issue, in my opinion. Okay, you got CMBS coming. You got the national debt itself that's outrageously big and growing, and then the refinancing of about a quarter of this $1 trillion. I mean, $32 trillion. It's about $8 trillion is coming due. So as it's rising, it's a wrong time to buy bonds, right? Unless you want to hold it to maturity, definitely don't do 30 year. Okay, yeah, don't go 30 year. I mean, you basically say I don't want any risk. I want to get 4.7% for 30 years. Hell, I can do that in 2 days on the futures. Are you with me? Look at my record. I mean, I'm just opening up my book right now. 2.43 today. This is not the small size. Okay. 2.92 on yesterday. That's the day before. Yes. Okay. Now Friday is very low. I did 0.8%. Not too shabby. And 1.9% on 21st. 20th, I did, let's see, about 0.4%. That was a little bit choppy. So I had a little loss. I had to recover. That was a bad day I had. Yeah, I barely broke even there. So, but net after the commission came about 0.4%. Very small. 7.2% on 19. So I don't know that. I haven't followed it. Okay. To me, I don't want to park money that long. This is a scared money when you park it there. You don't believe in equities. I do. Equities are, if you look at last 100 years, okay, 100 years, S&Ps and NASDAQ have outperformed. Bonds, notes, bills, gold, real estate, crude oil, silver, you name it, they have. Why is distressed debt, even distressed debt? Why? Going concern. Going concern. That's what means what? Again, going concern. It's like real estate. Location, location, location. This is the best. Nasdaq 100, 100 best companies in the U.S. Why are they so valuable, relatively speaking, and the return? They have management. They have balance sheets. They have products. This is an ongoing concern. That means that they have, the business is open. It's a factory. You're building things. Always going to be priced better than passive items. Bond is a passive investment. You're basically giving money. When you go to bonds, you're giving money to somebody like me to make money with it. I know it's a bonds thing, right? But money goes to government or money goes to corporate entity. They go make money on that asset. I go and speculate on how much they're gonna make on a short term basis. You see what I'm saying? So, any shutdown is a problem, but you gotta realize there was a shift there. Part of a problem. Listen, going concern. It's just that it works as long as it's going. When you get a pandemic, it's not going. You just answer yourself, Dennis. When you have a shutdown, there's nothing is going, right? Yeah. So it's going to be going concern, but because it's 100 names, it shifts to the 100 best. Yeah. Okay. So the 100 best. There's always 100 best out there. A little bit more, a little bit less, but you're not tied to a fixed item. It automatically look at Qs. Qs are recasted every night. Q is recasted every night. So you know the 100 best names always. Now, relatively speaking, compared to last year, or 5 years ago, it could drop or go up, but it still is the 100 best, the going concern. So there's a premium. Yeah. Listen, if we have a not going concern, where do you think real estate is going to be? Toilet. Double flush? Yes, that's what Seinfeld called. Courtesy flush. Yes. Where gold is going to be? That's why over 100 years it has outperformed. Look at the data. Look at the data. Forget your bias or my bias or XYZ. Look at the data. Over 100 years, nothing has beaten going concern. Gold is not a going concern. Bond is a passive. Bond is a tool for the going concern guys to take advantage of your money, giving you assured income while they do a gamble. Now, they got to have some credit rating for you to be convinced to give them that money. That's all. So, to answer you, Randy, I'm not good at that. There's a lot of people better out there. I'm an index guy. It means S&Ps and NASDAQ, which goes back to going concern. Now, I didn't get there by default or by chance. No. That Shelton, I attribute that Jack Shelton for that. That was my first professor at MBA at UCLA, Anderson School, and that was his big thing. Why valuations matter as an investment analysis course. I think what was it, 201, 202? I forget. And then when you try to build a portfolio, why going concern is a premium. You have to think about it. So I just took that, added to my repertoire of trading futures. I said, I should be trading bond futures. I should be trading S&P and NASDAQ. Probably best decision I've had. Yeah. Remember, there was time bonds were at, remember 2008? Remember 2001? These were trading at near 0%. I mean, I'm sorry, the front end was near 0%, right? And these were flat down, 1%, 2%. And they went nowhere. There was no change. So that's my bias. Unfortunately, that's what I know. Okay, another issue. Admiral Tico posted this level. We had not seen 0.55 in months and months. Now, it's a little bit difficult to backtest that easily because you have 3 futures contracts that are moving at a different expiration. Slightly different, I should say. If you go here, you see, no, I'm sorry, data. Sorry, guys, I'm a little bit tired. It's been a very, very long couple of weeks with no time off. And plus, we had to get all this code fixed. And now I still have one problem tonight I've got to deal with. But you could see, we have ESZ this December. We have VS Victor, VXV, which is October, because we're already in October, right, for the VIX futures. And then the short leg is January. So long October, short January. We have not seen You have to keep rolling that. Otherwise, you're measuring apples and oranges. We have not seen 0.55. So that was a near some sort of a low there. Guess what happened here? We went there, but we couldn't break it. So if you think about this, this is a bullish divergence, inverted. Are you with me? Remember, VIX is an inverted asset. So you have to look at this chart inverted. So, yeah, jump on your desk and get on your hands. Yeah, look at it that way. It's inverted. So I see a bullish divergence here too. The issue is why, when. I'm thinking any day, any hour. We'll see. The next couple of days, I'm probably not gonna get much of sleep. I've got a laptop on every look. In each room, I have a laptop with traces on it. Yeah, yeah. Because I mean, if I want to watch some TV, I want to have the laptop near me to see if something goes wrong. Put the alerts on, so forth. So I can, watch some documentary, hang around with Tico. In the meantime, overnight, I'm looking at what data is. Or this morning, I have a little Surface from Microsoft. I had on at 4:30 this morning in bed. Yeah, just looking at a few things overseas because we're that near, we're that close right now. Should be a good pop, but we'll see. Excuse me, hold on. Sorry, Tico, was that you? Okay, Boo, I'm almost done. Okay, so this one you want to take a look at. Drawing the sigma level is not going to be easy because that's the spread. Okay, we ourselves have to change our sigma channel not for the inputs to be a spread, but it can be done with a little bit clever work depending on your platform. But you could see where we get to that edge, either plus sigma or let's say down here negative sigma, and you could see when it started pulling up what a big drop that was. So we're here. We'll see. We gotta take a look. Okay, we did not get our rendezvous with a stock RSI. Rendezvous means the three of them trade either up here or down here. Okay, this is a rendezvous. This is a rendezvous. We didn't get that. Why? It's weak. Before the slowest one could get up there, it dived again. So we're going to get a little flush down that we'll take a look. And corresponding to that, SP2 is telling us almost the same thing. Now these are not. This is not a. This is not a. What do you call it? This is not a price based. This is price based. This is a bunch of internals. This one is published data. I mean, published formula by Stock RSI, which is Stochastic RSI by Tushar Chande. We have talked about it many times on the website. You can just look at Tushar Chande in the reading list, okay, recommended reading list, like a syllabus type. You go there on our website, and then it links you, I think, to Amazon. I don't know if the book is available, but there might be. One guy found it. One guy found the copy and got it. So this is what gave me a time, gave me a reason to look for something to better than this. I came up with CI, but it took me about a year and a half back in the right about the .com was coming. Yeah. Now SP2 goes beyond before that. This was late 90s. You could see what's happening down there. We're getting very, very down, and this is the second one. Value is lower, but we didn't close that much. Now this could be minutia. We could talking about splitting hairs. I understand that, and you're absolutely right. But we're near a bottom. Will I go long tonight? I can't tell you yes. I can't tell you no. We'll see. But those of you on the email list, you'll know. But there's a good possibility. Let's see how the news is. Okay, this will tell me the news, not that. Why? That's cash. This is futures. Okay, let's go here. This we posted again. As bad as this was. Okay, let me refresh these. We did not get to the 90%, not even yesterday. So the market wants to rip up, at least short term. But again, we're talking about the context of dead cat bounce. I'm not talking about buy and hold here. I'm just talking about let's say a trade for 2 weeks to 4 weeks type of deal. Okay, somewhere in here we could be near it, but we didn't get a flush yet. In the meantime, the futures what's called buying power index (BPI) from Larry is doing perfect, a clockwork. All the shorts are still working. Has not switched to long. Now there'll be some error. Always when that switches, remember short, long, short, because it doesn't know. It doesn't know. When it gives you a signal, it's talking about what you should be doing. So it's not playing back, looking at charts in the back, guessing what the forward is going to be. There's going to be some mess. Yeah, it's just trend following. Trend following is like democracy. It's messy. Okay. If it's orderly, you don't have a democracy. So is here. So or it's rigged. So I will watch this. These are futures, by the way. So by the way, I'm sorry. Let me address this issue. Last week we could not show you these. You know why? Because this is a new login. We had a problem with our last login about a month, 2 months ago. So all this time I missed not seeing this sell and buys on this. Why? This is a different login. I don't mean the same machine, different login. We killed that. Well, because these are proprietary codes, they have an encryption on it. The encryptions look for specific login. It has nothing to do with subscription. It's not a subscription. Even on these machines, so that if a machine is broken into, nobody can use it because the code itself has to be adhered to their machine. So, and this one I completely missed. I did post a chart for you guys the following day because it puzzled me, and I went to look at it. Now, the next problem we had was here of the same thing. This gave us the same problem. Again, this was dependent on the login. Remember, these are the indicators we do not give out. This had the same problem. And then there was one more I was looking at. Oh, that's to do with Tiger Shark. Yeah. Well, the Tiger Shark chart wasn't working, and we got that fixed. It's taking a little bit of time. I'm sorry. On the other machines that I do most of my work, those logins didn't change. This is the one I deal with you guys. You know, this is the machine that talks to the outside. Okay, it goes and fetches mail, emails out, creates a code, sends out code, or TSW files. Works. Yeah, they got to try. We had to change that login. That was a mess, but I have a pretty good rep there. They took care of me. Let's see notions. Okay, we have been looking at YOU. We've been looking at TDX. Not getting any signal. That's the discussion we had. Those of you in the chat room today, Pete was talking about this. Here's what we were talking about. We're not getting a signal. Remember, these are daily, these are by nations websites, okay? These are probably better tools than VIX and VXN and so forth that SIBO has. He did a big webinar on that. The hits were crazy. Those are mine. Okay, I'm basically done. Here's a little comment there. If you go to home, this first link, you're gonna see where this webinar, which is being recorded right now, will be posted. This is what he did last week in the middle of the day. You can see what happened. Went nuts. Yeah, here's something else. And then there's one more here. This is the one he talked about how he trades the futures. Yes, 259 there. This was 7 months ago. Is this how it was? I think there's one more. I forgot. Let's see. No, that's my office in Chicago. Yeah, I had a nice office there in the highways. Yeah, and that's a funding. Okay, hold on. This is my office. Well, this is my office. The last place. The place I'm in, I don't have a picture of it yet. One of my investors got panicky. Yeah. Hold on. This is there you go. This is the one you want to watch. This one, yes. Yeah, his hits are way above mine. Of course, I'm doing it every week. Okay, that's different. Same concept, same old. But he comes in with his methodology, and we put what do you call it, Tony Bennett up there. And this is the one you want to watch. It's phenomenal. So I'm learning too. We're beginning to do some of the gamma stuff in the room, so I'm learning a lot. So it's really good. Keeps you young. All right, let's go to my last chart. Remember what we talked about? 55 to 45. Okay, that's all history. Look where it stopped at 40, where these two lows are. So we're at the key area. almost a breaking point. If this breaks, we're gonna go. I mean, it could be down here. This is hold on. This is October of last year. This is July of last year. Yeah. Let me come here. Let's go to 5 years so we get a little bit more history and apply. Okay. Okay. Now, this is remember, it's a little bit different high and lows. Like that's the high and lows of the price. But this is the percent of stocks above 200 day. This is pandemic. This is the shutdown. So this says we could be hitting 10 or to 15. 10 to 15 area at 40. That's how bad it can get. Okay. With that said, I'm going to stop here. I'm going to ask you to please share with me any questions you may have. Then I got to take my little Admiral Tico out for a walk because it's been raining here. Hold on. On the what do you call it? On the this one on this chart. Hold on. Let me also make that a little bit bigger. Okay. You always going to see head and shoulders. Yes. The problem is, Dennis, is that you and I are classical chart guys. We're looking for something near perfect. This is a derivative of price action. Okay. So a lot of times it doesn't come clean. Doesn't come head and shoulder type. Well, is this going to be the inverted head and shoulder, like going back up? It could. Or you're looking at a kind of weird, or maybe this one, head and shoulder, uneven head and shoulder. But I usually draw horizontal lines. Those are my kind of a region to think about. And my region always in the center area is 45 to 55. We're clearly below that, challenging these two lows, which goes to January or December. No, late March and maybe May of this year. So that's a 5-year back. Yeah. So any violation of this, you should be seeing here at least this level, this area, at least 15. And that could be a lot faster. Why? Fear. Yeah. So I'm saying go back to January high of 20. Okay. This one. Okay. Oh, you're saying this, that, and this? Oh, I see what you say. Yeah, I don't know. Too far. Too far. That's multi years. Yeah. This is too. It's got too much noise in it to be that clean. It could work. Okay. It could work. Good eyes. And kudos to you if that happens, but who knows? It's like a roll of the dice. It doesn't happen often. These are too far. I mean, if you want to get a perspective, I mean, maybe this is a 3-year thing. Take a look, or 2-year. You could see it's really a little bit more predictable this way, just to see the nuances. But I mean, right now, all I know is this, I care about here. That happens, yeah, that's the reference. It's a benchmark. Some sort of, look what the values, relevant to the values. But I look from these two, the 20 bar and 50 bar. Look at separation. Yeah, that tells me there's probably more pressure coming. So I should wait a little bit for a long. And it's too late to get short. Yeah, that's the problem. I mean, too late to get short in the sense that you're gonna pay somebody else's profit. Yeah, I hate doing that. Yeah. So I want it for moi. Yeah, exactly. And you guys who follow me in this trade. So not for somebody who's already sitting there patiently to find a sucker like me or you to come in there. It's a little bit late, I think, on the short side. Long side, if we get it right and the sentiment, the reading of the sentiment is correct and the market is with us, oh wow, yeah. We could pop, it'll rip the faces of the shorts for about 2-3 days. Probably in 5 days we're done. Look, the last trade was the same thing. Now we got out a little bit early because we were considerate or we were conservative. But look at it. Look what he did. Remember, this bothered me. I got a little bit early here. Look what happened. Yeah. So, but nobody went. Nobody went. No, I'm sorry. This is the 15, isn't it? Yeah. Okay. Nobody went. Nobody went bankrupt by taking a good profit, 57%. But we were being close to 200%. Yeah, easy. Close to. Yeah. No, close to 200%. Yeah. This trade was so. So same thing could happen in reverse if we get the long right. So obviously, there's a lot of factors. The vols, the spread, the long and the short part, our timing, and then our fortitude. You can go and find a trade. You can look at a chart. If you don't have fortitude to stay in a trade, it's just exercising futility. You got to put it. Remember, when I pull the trigger, it goes to let's say PTI. Bunch of people get that trade. It's not a joke. It's real. We're in a position, and Nancy kicks in to keep an eye on it constantly throughout until we're out. Why? One mistake, or if I'm not at the machine, something happens. I'll see her coming on the phone saying, "Farry, pick up the phone. I have an issue. We got to deal with this," and we will. So, and she's a good option trader. So, even if I'm in the car, I'll listen to her analysis, and I say, "Fine, let's do this." Why? You know how options are. You could be a millionaire in the morning and have 10,000 left by afternoon. I mean, these things move fast because of the delta they have. Yeah. So we got to be careful. Any other questions for me? This is the last webinar for summer, basically. Summer's almost started. Well, no, it is started 6 days ago, but this is the last one in September. Thank you, Dennis. Thanks for all you do for us here. Appreciate that. For your continued support. Again, to come up here, here we go. Here's how you register. But if you're here, you're already registered with us. The list comes to us now. We do update our list of everything, total list we have, but it's usually once a week, once a month. But data is kept at the GoToWebinar. But once you register for this, you're in. It reminds you, I think, 5 days, 1 day, and like 2 hours, something like that. If we have other webinars, that's not related to weekly. Weekly has its own cycle. That gets reminds you on Twitter. So you may want to follow us on Twitter. This is a Twitter you follow, which is Hamzy Analytics. And of course, don't forget, let's see. Where's Admiral Tico? Admiral Tico. No. Okay, yeah, I gave you a comment there. Yeah, you want to cover this because if we got to do something, we'll give you a heads up. And then, where was Admiral Tico? There you go. Do you Tico? Don't forget to Tico. That's following Admiral Tico. His numbers have been exploding. He does 2-3 charts a day. That's important. With some analysis of what the hell is that? That's an ad. Block this ad. Yeah, stupid. Okay, so follow us, or you can go to our website. Sorry, go to our website and check, just in case if you have some extra time. Go to our website and there we go. Go to members. You don't need to get past the paywall. This is the paywall. No, but we post up here. The time and date of each event, and if there's a link, how to get in. Okay. This is being recorded. I'm going to stop it now, get it to post processing, and then post it on YouTube. I'm sorry, forgot. YouTube is here. First link here. There we go. And it goes back, I don't know, to 2007. There's over 1,000 videos there, so you can see on different subjects. Predominantly, it's this one, the weeklies. We do look at the comments, but sometimes they're trying to advertise. We just block them. Yeah. All right. Are we good? Okay. Have a great weekend and be careful with the market. I think tomorrow will be okay. Friday could be very dicey because of, again, end of a quarter stuff. Good night now.